Traders say they expect money market rates to decline today as banks anticipate inflows from the Federal Account and Allocation Committee. Akpevwe Oputu, money market trader at Axis Bank, joins me for a midweek review of the markets. Akpevwe, thank you for taking the time out to join us today.
Thank you for having us on the show, Esther.
Well, it's midweek. Bring us up to speed on, let's start with the yield curve. What trends have we been seeing so far?
Okay, on the money market space, just like you mentioned, the FAAC disbursement came into the system late yesterday. So for the month of August, they actually allocated about 924 billion. So we've seen about 48% of that come into the system today. And that's actually reduced the money market interbank rate. We've seen rates trading in the interbank market as low as 7% on the OPR and overnight rate. And we expect that this will continue up until Friday when we have the retail SMIs auction. And on the treasury bill space, we've seen a lot of activities there. We've seen buying interest on the shorts and mid-tenured securities. And these levels have actually come down from where they were trading yesterday. We saw rates trading around 11.2% on the mid and short-term securities. But now we could see the rates trading around 10.8% levels. And this is due to the FAAC disbursement that has brought in liquidity into the system. Also on the bond space, we've seen a lot of bearish sentiments on the short end of the curve. We've seen a lot of buyers taking yields as high as 12.9% on the short tenured bonds. But on the long end of the curve, around the 42s, we've seen a lot of buying interest, which rates trading above the 14% handle.
Oh, 14%, that's high. I'm just wondering how much headroom do can we expect the bonds to go in terms of for the longer tenured bonds, and of course how investors are playing this market? Do they foresee more headroom for those rates to go higher?
Okay, yes. Last week we saw the rates go as high as 14.4% levels on the 42s. And you must remember the auction closed around 14% levels. So when you see these rates in the secondary market trading above the stop rate, it actually at attractive levels for investors to take in those yields. And for the 42s, we've seen that the DMO has actually issued above 1 trillion of that security. So I think the market players don't expect that this 42 will come back into the market at the next bond auction. So taking this yield above the stop rate is actually at attractive levels for investors.
I'd like to get your thoughts on this story that we've been discussing on our show since Monday. The government proposing a budget deficit of over 11 trillion for the 2023 budget. Of course, a portion of that, there's going to be, of course, domestic borrowing and foreign borrowing. I believe 7.4 trillion will be sourced from the domestic market. I mean, as a player, as a trader at the market, talk to us about what this means for the market, what this means for the corporate bond market also.
Okay, so we'll see the bond, we'll see a lot of demand from the government and the bond space. So at the next bond auction, we actually expect that the amount or the volume that will be on offer at the bond space, they've been doing about 150 billion on every security they've come into the market to float. So we'll see a lot of take-ins from the bond borrowing space. And the money market on the treasury bill space, we've actually seen the DMO roll over every maturity that has come into the system. So we've seen that there's no liquidity on that side, so they are still looking to borrow much more. So we expect to see rates trending higher on the T-bill space because we saw it close at 8.5% levels on the 1 year. So if the borrowing continues or the increased borrowing, we'll see rates trending as high as 9% at the next NTB auction. And for the bond space, I think players expect that the rates will continue to trend higher if the government continues to borrow more.
We have just 1 minute left. Let's quickly head to the FX market. I know it's still illiquid, but where are rates now on the NAFEX and the INE?
Okay, so we've seen rates depreciate. We've seen the Naira trading around 435 Naira to the dollar. And with the CBN's interventions for airline this week for about 236 million dollars. We've seen a lot of activity happen on the FX market. But also we've seen other interventions from the CBN to the tune of about 450 naira to the dollar. So we continue to see rates depreciate in that market. We still see illiquidity of funds in the INA window, and we expect that the rates will continue to trade higher on the space on the INA window.